Good evening, ladies and gentlemen. This is Clueless 8 again, and we're going to quickly cover a couple of stocks which are in play right now. I have quite a few recommendations, quite a few ideas that I've posted on the real time blog, and and I want people to concentrate on a few of these that I'm going to show on the basic service. Okay, I do highly recommend that anyone listening to this video cast do try out my real time blog, which is it's slightly costlier, but I think it's worth the money. Even though if you're not an active trader, you can uh, avail yourself of a significant amount of market breaking type of news, my commentaries and my analysis in short bursts to get an idea of what I see and how I think. I can never explain to anyone what's in my head. All the years of experience of understanding how markets work, how life works. We are all products of our own experiences, and I believe that it's very difficult over a video cast or a tweet to explain why I think the way I do. I am far from perfect. I am a survivor, and I believe that we live in, we live in a world where we undervalue in a significant way where we are here in the U.S., as you can tell by my missives and my write-ups, versus what's out there in the world. I know this for a fact because I've lived overseas and travel extensively every year, and that's just it. Okay, so let's look at Facebook here. Facebook, I just drew these channels. All right, as you know, my charts are very unorthodox, and so I don't always follow the usual traditional legacy technical analysis rules. So I do apologize for that, but my charts work. So that's all that really matters. So here are the channels that I drew. You can clearly see this red line here. Let me highlight that. Okay, this red line is the downward sloping 50-day moving average, and guess what happened? It hit the upper end of the channel, second channel, slightly crossed over the 50-day, and then reversed a bit. Nothing major. Nothing major. I think the standard procedure on Facebook. I've been recommending Facebook for a while now, all the way from this 56, 58 level. And the reason I find some heavy opportunity in this particular area, the potential, is because honestly speaking, the worst it got to was 54, and then it dawdled around, kind of muddled around 56, 58. Now it's only at 60. For God's sakes, this thing can easily move up to 64, if not the third channel, which is around 68. So that's really what I'm targeting. The upper Bollinger at 64, and then this channel here at 68. After 68, as I've explained in my previous videocast yesterday, it's got free room to do what the heck it wants. It can move up to $80 if it wants to, but that remains to be seen. So here on a short-term basis, people have asked me where's my stop. Honestly speaking, the stop should be maybe this is just small numbers. I don't even know where to put the stop. I mean, if you're buying the common, you would want to put the stop somewhere maybe 2 points from here, around this level, 50, around 58.20 maybe. But I believe that as Facebook breaks up over this, hits the 64 level, 4 points from here, and then Bollinger's pressures Bollinger to turn around a bit and head to at 68. So that's my scenario. It's got a lot of strong initiatives going on. Stock was held back today due to options expiration, I believe, weekly options expiration. Stock was upgraded. Whatever the case may be, I think this 50-day needs to be decimated in volume and in price. This red line, it needs to be decimated as the stock crosses over $62 and hits 64. That's when then technicians start to get comfortable. Over 50, it starts to move up. Okay, so that's Facebook for you. Let's look at Feye. This is an unbelievably beautiful chart. Okay, I've played these type of reversals so many times over the past couple of years when everybody was just, excuse my French, pissing on companies. I can show you hundreds of examples, and if somebody does have the time and the patience, go over my charts on the price lines of the world and the CMGs and the Googles, you name it. That's my claim to fame. Over the years, when they were just like, oh, these things are just finished and just blah blah blah, these falling wedges generally tend to resolve themselves on the upside for a bit. Okay, as long as the company is a real company. This is a real company. Mandiant is the division of Feye that detected the whole Chinese spying, electronic invasion of the United States. Okay, and the cyber attacks. So these guys are not kidding. Yes, the multiples got bloated. I'm not a fundamental analyst, so I'm not going to even comment on that. But there is huge growth in front of these guys. They're working with eBay to fix their cyber attack issues that occurred a few months ago. Let's just stick to the charts here for a minute, okay? Here we have a massive, volume. You can clearly see here. There's been volume for 1, 2, 3, 4, 5, 6, 7, 8. 90 million shares came unlocked. Look what happened to stock. It went up. So just let's keep it simple. So what I'm looking for is not the moon. I'm simply looking for it to close the upper gap at around 37 and get to the upper Bollinger at 40.71. If it breaks that and attacks the 50-day, well, good for everyone. It goes to $48. So it's doable. All right, it's doable. So here we are looking really solid. This is this automatic green arrow that appears because of the programmed stochastic, MACD, the moving average crossovers. Okay, this is for real. This I don't put there. This is automatic. I can remove it. I can put there. It appears. So this appeared at around $27. So let's respect it. So you know where it's going. Here we have it's getting overbought. Couldn't go up a little bit more. So keep a close eye. Put a stop around I would say around $29, $29.50, and just play it. Apply the weekly calls. Just go for it. Let's look at the next one. Another beaten down monster, which is Splk, which I believe is one of the best companies in America on the data on the big data analytical side. Read up on it. So here's Splk on the daily. Again, shown this a few times. These type of charts attempting a large macro falling wedge. Gotta love these. Okay, gotta love these. Earnings coming out next week. Huge amounts of call activity happening, as reported by briefing.com and other services. Okay, they're buying 52.5, so that means they're expecting the stock to move up towards this level. Guess what? That just happens to be the 34-day moving average, $54.50, and they're buying the 52.5s. Wow, not a coincidence, right? So smart money kind of knows, or the fast money kind of knows. We still need to get overbought here, so we're good to go. Looking great. Open mouth of these MACD averages. Very positive thing. So this one, I think first stop is going to be around 49, and then it hits. I think it can get to the upper Bollinger at 58, and if they really deliver the goods, then it's going to basically cross over $62. And when that happens, it's going to come back to this top, follow the arrow, which is $68. And people are going to look back and say, what the heck, I should have bought it. The same old story. What's the downside? Very limited. This is a risk reward play. The downside is around 41. So can you afford to lose $4 to gain 12? 3-to-1 ratio. Okay, on the upside, I think you can take that bet, right? So that's trading. All right, let's look at. I got 2 minute and a half on this. Let's look at Gilead Sciences. Power move. I was tracking this stock all the way down here, if you remember. I actually let the stock go at these at this level, and now it's climbed up another $6 from there. So I know I rest my case here. Look at this. Nobody ever could imagine this stock could almost get to its previous high. So that's, what can I say? And now it looks like if it breaks over 84.34, this thing's really going to go, or it's going to consolidate here and come down to about $79 and be a strong buyer of that at that level. But this is a very powerful chart, and you can clearly see it stayed overbought for, since the 21st of April. Okay, let's close out this segment.